Good evening, everybody. I'm gonna do a features basics for those of you that have not been able to come to mine that I've held before. Gonna wait a couple of minutes to get started. Let's see. Hang on a second. Screen share presentation. Video settings. Can you guys hear me? I'm gonna wait and get started. If you guys want to follow along, you can go to this website. It's all free. It's called propfirmtrend.com. And you can go to trading resources, and you can find that right here. Let's see. So, all right. Music. Nah, we don't want music. Can somebody type in the little chat, please, if you guys can see my screen and if you can hear me? That would be wonderful. And I'll answer any and all questions at the end for you guys. So just know no question is a dumb question. We've all started somewhere. So so if you go into the propfirmtrend.com, so here's the where this trading psychology, trading journal, trading resources. And then you click on that. And this is where it says futures trading basics. And I'm going to go over everything, basically how you can get started trading futures with, funding your own accounts using traditional brokers or using specialized um, futures brokers or, prop firms. So there's 3 different ways to trade futures. And I'll go over all of them. So you're welcome. Let's see, as soon as I get about 200 people on, then I'll get started, because what ends up happening is I start getting questions that I've already gone over. So if you guys would retweet, that would be great. I know it's a Wednesday night. People got better things to do. But if you're serious about trading, you guys, continuous learning is where it's at. And if you want to be successful at it, you need to know the foundation, which I believe the many, whether they're trading futures, whether they're trading options, they actually don't get the foundation beforehand. They just kind of jump in and learn, trial by error. But the thing is that trial and error costs money. So when I got started trading futures over 3 years ago, I came from options, and I didn't have anyone to give me, um, pointers or anything about futures. I mean, I researched things, and it wasn't like it is today, where you can just, a lot more people are doing it right now, obviously, but it I learned a lot by trial and error, and it cost me a lot of money. So I made it my mission. For over 3+ years, I've been teaching the futures basics for free, whether it's in Discord or here, in Spaces. And like I said, a lot of from what I see in, I've came across thousands of people. A lot of them just don't take the time to learn the foundation of futures, and then, applying their trading skills. And the thing is you need to do both. if you want to be successful, it's like, you can't just start in the middle and just jump in and, hope you'll navigate it. Sure. If you've got an unlimited amount of money to blow, then be my guest. But those that come prepared, and try to prepare themselves, they're going to do a lot better, and they'll stay in this game for a lot longer. So there's a reason why 95% of traders fail. And let me see. Why is that says a welcome? That should not be it. Okay. It's weird. On my screen, it shows something else. Okay. Well, let's get started. You guys can see me and hear me. You can see my screen. Anybody? Oh, that goes. All right. Thank you, Fenster. All right. Thanks. All right. I'll get started. All right. Thanks, guys. Maybe there's a delay or something when you guys type. I don't know. And I'll do a drawing of like 2 people to give away a 30-day free live trading to Traders Wealth Lounge Discord. There's 5 analysts there. So where is this? Okay. So I will answer any and all questions at the end, guys. I'm not going to stop the stream to answer questions. So if you're just joining, basically I'm going to do futures basics. It's everything you need to know to trade futures, whether you're trading your own personal accounts, funded accounts, funded prop firm accounts, or using traditional brokers, things like that. So let's get started. Okay, so what are futures? So futures trading is basically a contract between a buyer looking to invest and a seller where the contract is made for the future and has an expiration date. So there are 2 participants, hedgers and speculators. Hedgers protect their assets from risks, and speculators are usually floor traders. So as retail traders, we are considered speculators. So futures contracts are available on 5 different assets: equity index futures, interest rate futures, commodity futures, currency futures, and metal futures. And they all have expiration dates. Okay. So equity index futures, they expire typically. It's on a 3rd Friday of every 3rd month, and that's the S&P 500 and Nasdaq. So the index futures. Quarterly expirations March, June, September, December. So right now we're in October. We're actually trading the December contract. So interest rates and commodity, currency, metal, so gold and silver, oil, all of those, they are monthly expiration. So you don't have to remember. Your broker will send out an automatic notification. It's just going to say like auto rollover notification. You just click yes, and it's going to roll it over for you. So you need to change the title on Restream. What the heck? Hold on, I just got a message I gotta change. Oh. Okay, sorry guys, let me... Apparently, I need to change the title of what I am speaking about. Oh, there you are, Emp. Sorry, guys. Okay. Thanks, Emp. I love my team. They're looking out for me. Apparently, I needed to change my title because it wasn't showing up. So, all right. Okay. So basically the purpose of this is to teach some of the fundamentals of how futures work, how you can trade them on your own account, and how you can get funded accounts, since I believe that many will benefit from adding futures trading to their skill set. And so some of the terminologies, some of the key terminologies used in futures trading, lot or contract is basically that of the, unit of the instrument. So if I say I'm trading 5 contracts of NQ, it just means 5 lots or 5 contracts. That's all it means. Tick is the smallest price movement that a futures contract can make. So 1 point is a $1 move or 1 handle. And Globex is basically an electronic platform used for derivative futures and commodity contracts. However, traders also use the term Globex to mean the overnight session of the market. And RTH is just the regular trading hours for a specific exchange or market center, typically during the New York Stock Exchange Open. Margin is the amount of money required to be deposited by a trader to open a futures position. You guys, this is kind of self-explanatory. Open interest, settlement price at which a futures contract settles at the end of the trading day. So gonna kind of skip a little bit of that. So first off, the market is essentially futures. So we frequently discuss ES. So the S&P 500 futures are those. So although these futures are traded similarly to other derivatives, leverage is what they offer above all else. So futures trading is simply a very leveraged form of stock trading. So to contrast with futures, an E-mini S&P 500 contract offers roughly 32 to 1 leverage. And because ES trades in ticks, aka 0.25 spread, one contract changes value by $12.50 for every 0.25 that it moves. So you gain or lose $50 whether ES moves 1 point. And if ES changes by 10 points, you either win or lose $500. So if we're trading at $5,000 or $5,000 and it goes to 5,010, that $10 or 10 point move is $500. Now, a tenth of an ES is called a micro MES. Okay, so instead of the $50 per point, it's $5 for each point. And these trade in a manner more akin to shares than options. So there's no theta, there's no IV, stop losses can be placed at precise price points. There's no PDT or anything like that when you trade futures. Each contract has its own specification, including the size of the contract, the tick size, which is that minimum price movement, and the delivery date. Micro E-minis are 1/10 as small as E-mini contracts of the same type. So I'll kind of I'll pick a few here and go over them, but basically, many new traders, when they jump straight into trading futures, they jump to NQ or ES thinking they're just trading futures when the risk is equivalent to trading the full index value. So they don't realize that trading NQ is like trading NDX. Trading ES is like trading SPX. So most traders should be trading the micros, so MNQ instead, which is like trading QQQ, or MES instead, which is more like trading SPY. Um, so it's 1/10 of the risk, and I think a lot of people, like I said, they start out with trade. It's kind of like let's say you're beginning to trade options, and the first thing you do is jump into trading NDX or SPX instead of doing the smaller, which is SPY and um, QQQ and things like that. So you don't want to trade the minis, which like NQ, when your account says that you should be trading MNQs, and same thing goes with ES. Um, so sizing and risk management is very important. So I spoke a little bit about ES or S&P 500, but one NQ changes value by $5 per tick or $20 per 1 point. However, NQ is a lot more volatile and it moves a lot more than ES does. So it's not, it's best to start with the MNQs, or a lot of people will start with the S&P 500 or MES. Now, one thing I wanted to kind of point out to show you guys the difference. So there are 4 ticks in each point when we're trading, ES or NQ. However, if you're trading oil, so CL, one mini changes value by $10 per tick or $10 per every penny. So every 0.01 cent that it moves, each penny is a tick and it's worth $10. So this should actually say $1,000 per point. I keep forgetting to fix this. Per point, not $100. So if oil is trading at $60 and it goes from $60 to $61, so that $1 change is actually $1,000 because every tick, every penny is $10. And I found out the hard way because the first time I traded CL, I get into it and it didn't even move, and I'm like, how am I down $80? And it barely moved. I'm like thinking it's a glitch or something. Well, then I come to find out that I was down 8 cents, which is equivalent to $80. So it's important to know when you're trading each instrument what the changes of value is. Okay. Also, trading hours. So futures market is open 23 hours a day. You must close out your positions by 4:59 p.m. Eastern if trading funded prop accounts. It opens Sunday at 6 p.m. Eastern and closes on Friday at 4:59 p.m. Eastern. Best times to trade are during the New York Stock Exchange market open or during the European markets, which is in the middle of the night. Some people also like Asian time, which is actually right now. I find it very slow, so there's not a lot of liquidity and I don't really care it's kind of a hit and miss. But you also want to check the holiday because the hours may vary. So when we had Labor Day back in September, futures opened at 6 p.m. that Sunday night, and then we closed at 1 p.m. that Monday. But New York Stock Exchange was actually closed all day. So we don't share the same holiday schedule. So this here is kind of a little cheat sheet you guys can find in this trading resource. It will give you the description of whatever, NASDAQ or NQ, the minimum tick amount, the dollar amount per tick. So it will have it here for you. It's, you can scroll down, look at gold moves or crude oil, the micros. So S&P 500, which is, the micro MES, it's 0.25 is the minimum price movement, but it's only $1.25 per tick. So it's kind of a good thing to have as a cheat sheet. So there are different ways of getting funding. Okay, so I'm going to start with funding your own accounts with your own capital. One way is to, if you have like a traditional broker, such as Interactive Brokers or TOS, um, you'd actually want to check with your broker how much capital you would need for these. But usually you need to request to be approved to trade futures. And then once you get the approval from your broker, you can trade micros, which cost roughly about like $2,300 for an MES lot. And if you're trading the minis, it's about 23K for one ES lot. And with this, you're able to swing trade. So you can swing, if you are a swing trader, you can swing through the weekend. But there are other brokers, which is the ones that specialize in futures, such as NinjaTrader or Trade-O-Eight. Webull allows it. I think somebody said that Robinhood is allowing futures trading, or it's going to soon. I'm not 100% sure on that one. I don't use Robinhood, but AMT is another one. So instead of the $23,000 for a traditional broker, Trade-O-Eight offers, $500 to $1,000 day trading margin for E-mini contracts. So micro contracts are even more affordable. So MES costs only $50 day trading margin, and MNQ costs $100. So instead of up here where you've got the traditional 23.47 for an MES lot, it's actually $50 instead. And this is for the day trade margin. So I'll explain that in a bit. But NinjaTrader owns Trade-O-Eight, so actually you can fund NinjaTrader and use the money on Trade-O-Eight platform or vice versa. You can also practice on their sim Trade-O-Eight accounts. So like you can go to tradeoveight.com or ninjatrader.com if you just want to. I think they've got like a free 2-week demo just to kind of practice, get on there and see how it works. But let's see. So here, the margin requirements with Trade-O-Eight and NinjaTrader day trading requirements. So basically, ES for a day trade or day margin, it's $500, and Q is $1,000. Now, if you see to the right where it says initial margin, it's 23,470. Again, you want to check the current margins, but this was when I had this built. And the initial margin for NQ is 33,000. This is just for one contract, guys. And then down here is the micros. So basically, Trade-O-Eight offers a reduced margin for both the day session as well as the overnight session. Now, the reduced intraday or day margin is available from 6 p.m. Eastern until 4:45 p.m. Eastern the following day. So basically almost 23 hours. Now, this, where it says initial margin, this portion is required if you are wanting to hold a position from between 4:45 p.m. until 6 p.m. So like for an hour and 15 minutes. Or like if you want to hold it over the weekend. So you would then need to have the initial, margin. So as a day trader, as a scalper, I don't swing positions. I can, heck, I can get 30 NQs for the, obviously the risk is not the same, but you guys, get what I'm saying. So, in 23 hours, I can hold my position and I can close it at 4:45 p.m. and reopen it back up at 6 p.m. But, for those that are really, that love to swing for, weeks out or whatever days, it doesn't matter, then, you'd need to look at the initial margin. I think the account minimum is about $250 to open a Trade-O-Eight account, which is one of the lowest in the industry. So you can also, like I said, use the micros. MNQ is $100 per contract for the day margin. MES is $50. So there's that. And the third way is through prop firms. So trading prop firms. So basically, with that is you utilize a finance partner, also known as Tradeify, Apex Trader Funding, Take Profit Trader, the Futures Desk, Top Step, or My Funded Futures. There are many, many others. I think there's like 70 or 80 different types of prop firms out there. I've vetted about 20, and I would say about 8 to 10 of them are like my favorite. Um, but you want to do your due diligence and look at different firms if you want to compare them. But I'll give you guys just a little bit of an example how they differ. They're all unique in their own ways. But for example, Tradeify has a 1-day pass, and they also have a straight to sim funded or lightning account. And what that means is that you don't even need to pass anything. Okay. Top Step has a 2-day minimum evaluation where you can be funded in as little as 2 days. And Take Profit Trader has 5 days. So here I'm going to use Apex as a trader as an example, but how this works. So you demonstrate to the prop firm that you are a successful trader. You must pay a fee or to enter the evaluation, which is a sim. Okay. If you succeed, you will then be given a funded account to trade with. You pay the activation fee. Also note some prop firms don't even have activation fees. It depends on accounts and prop firms. You get to keep all of your proceeds up to $25,000. You get to keep 90% of the profit after the first 25 you earn, while they keep 10%. So you want to see, the prop firm rules with whatever prop firm you're utilizing. But some people will get multiple accounts, one on discount, so they can trade them at the same time. There is a trade copier you can use, and each account must pass the performance evaluation. So, is this too good to be true? Not really. Most traders fail due to lack of discipline. Okay, and this is how these companies make money. Actually, most 95% of traders fail, whether they're trading their own money, their grandma's money, whether they're trading options, whether they're trading equities, crypto, futures with their own money, whatever it is. That's what is stacked against us is, you know, high failure rate, right? However, if you can trade the chart, such as price action, um, and stay disciplined and consistent and manage your risk, then you're going to be fine. You're going to withdraw money. There are people all over the world who have withdrawn their funds, and they're also consistent. So the worst that can happen is you lose your account evaluation fee. You do not pay back any capital. And you can also take the evaluations as many times. It's not just once and that's it. I also want to mention that when you are taking an evaluation test, okay, it is to show them that you can trade. You do not get to keep any money in that phase, because you're not at the funded stage yet. Okay, unless you get the account that is straight to sim funded or lightning or instant, whatever everybody calls it different these days. And you can also trade your own funded accounts. So let's say I have funded accounts like through TraderVate and NinjaTrader, and then I can connect them to all of my prop firms. You just have to sign up for a personal account through NinjaTrader and fund it yourself. And then once funded, there's a trade copier. You can connect them all and trade. So in my opinion, if you just want to test it out, although they do have tight restrictions or regulations, you're essentially forced to have good habits. So this here is from Tradeify. Nope, sorry, from Take Profit Trader. And why prop firm versus trading your own money? Well, all technology and account setup is done by them. So there's no documentation, there's no, painful account setup experiences. Simply put, most traders are undercapitalized. So you level the playing field by using their accounts, not your own funds. Lack of discipline haunts traders, and their risk management system, the rules make sure that you stay disciplined during your trades. And trading your own funds can lead to severe losses. However, if you're trading with Take Profit, your losses are, or any prop firm, your losses are limited to the associated challenge fee. Like I said, you don't pay back capital or anything like that. So I'm going to actually pull this down here. So this right here is from Apex, but basically, let's just pick a 50K account. Okay, so your profit, this is what you need to meet to pass the evaluation. So your profit goal for 50K is $3,000. Your trailing threshold is $2,500. Once you meet that $3,000, you basically pass your account. And then you get an email that night, you passed your account, here's your funded account. I think actually Apex is running an 80% off right now with a 1-day pass. Typically, they're to pass their evaluations a 7-day of trading, but many times they'll have like an 80% off with a 1-day pass. So let's say tomorrow you trade, I don't know, you pass this 3K. Tomorrow night, you're going to get an email saying, hey, you passed, the account, and then you pay an activation fee, and you basically start trading on that funded account. Same thing with this is Top Step, 50K account, $3,000 profit target. The maximum loss is actually $2,000, not $2,500. And you get to keep 100% of your first $10,000 and then 90% afterwards. This is Take Profit Trader, similar, except they have a 5-day pass. And also, I do want to say that Take Profit Trader and Top Step have a 50% consistency while you are in an evaluation. But once you pass, there is no consistency, and I'll explain what that means in just a little bit. But as you can see, some firms like Apex has no consistency. It doesn't matter if if you hit your goal tomorrow, you get a funded account. However, I do not recommend anybody trying to rush this. Take your time. You do not have to pass it in 1 day. You don't have to pass it in 5 days. You can take your time, pass it in, if it takes you 20 days, it takes you 20 days. There's nothing wrong with that. Okay. And I honestly recommend you take your time, just the way you would trade, because what ends up happening when you're trying to pass something really fast and you start to build bad habits, that will transfer over to your funded accounts. Okay. So, the futures desk, same thing. They actually end up having, once you pass, you get you get daily withdrawals with them as well as Take Profit Trader. And then this is Tradeify. As you can see here, it's called Straight Sim Funded, but they changed the name. I think it's like Lightning right now. So there's no evaluation. You don't need to meet anything. If you get this type of an account, you skip the evaluation. So everything that you make in here, granted you don't go below your, limit, then you are able to withdraw the money. However, up here, they also have 2 different evaluation accounts. One is an end of day trailing and one is intraday trailing. And the reason I'm showing you guys this is because I'm going to get to something that's very important, which is the drawdown. The futures desk has probably one of the best static accounts. So, and it brings me to here. So, what is drawdown? So, drawdown is the maximum loss you're allowed to have before your account gets breached. And understanding this, how it's calculated, is crucial. Okay, a lot of people don't look at this. They don't read the rules, and then they're gonna blame the prop firm or whatever. Well, the thing is you didn't read the rules, and they're really not that hard. It's simple. You just need to understand which one you want to. It's customizable. You can pick what you what you want. So intraday trailing. So your drawdown limit moves up with your balance and unrealized gains throughout the day, but it resets to the daily starting balance each day. So, for example, 50K account with 6%, let's say you have a 3K drawdown. Day start, $50,000. Your drawdown is $47,000. Let's say at 10 a.m. you make $500 profit. You're up at $50,500. Your drawdown moves to $47,500. 11 a.m. you make another $300. You're at $50,800. Now your drawdown moves to $47,800, which is that $3,000, right? Guys with me? Okay, so 1 p.m. you open a position with $600 unrealized gain, and then your balance goes up to $51,400 unrealized. Now your drawdown moves to $48,400. It trails the unrealized gains. Okay, 2 p.m. you close out that position for $400 realized profit, which now your balance is at $51,200. Your drawdown stays at $48,400. It doesn't go down. Let's say at 3 p.m. you lose $400. Now you're at $50,800. Your drawdown stays at $48,400. It doesn't go down. So the remaining drawdown is $2,400. It's not $3,000 like you started with, because it's $50,800 and minus the $48,400, it's $2,400. So the next day, your balance starts at $50,800, which means that your drawdown is $48,400, which was $3,000 from the highest balance, including unrealized. Okay, so now your available drawdown is $2,400. This is probably good for people that take base hits, who don't oversize by any means, and more for scalpers. If you are the type of person that will hold a trade all day, I would not recommend getting an intraday trailing account, because it's, if you are sitting there and it goes up $1,000 and then it comes back to your break even, that $1,000 is actually hurting you, even though it was unrealized. So the next one is called end of day trailing. And how that works is that your drawdown limit only moves up based on your ending balance at the close of each trading day. So for example, 50K account with 6%, so it's 3K drawdown. Day one, you start at 50,000, your drawdown is 47,000. Total drawdown available is 3,000. During the day, it's up to 51,500, then down to 50,800. Your drawdown is going to stay 47,000 all day. Your total drawdown available is $3,000. It stays fixed all day. Okay. So, day one close at 50,800. Your drawdown will update to 47,800. So let's say the next day you start with 50,800. Your drawdown is 47,800, which is $3,000 from the new starting balance. Okay. That's what the end of day trailing is. If you look at static drawdown, this one, the way it works is your drawdown limit is fixed based on your starting balance, and it never changes. So same example, 50K account, 3K drawdown, your account starts at 50,000, drawdown is 47,000. Week one, you grow to 55,000. Your drawdown stays at 47,000. Okay, month one, grow to 60,000. Your drawdown stays at 47,000. Okay, let's say month 6, you're up, your account is at $75,000. Your drawdown is still 47,000. However, if you lose $28,000, which is, the 75 minus the 47K, you can still breach the account. So that's what the difference is. And many don't take the time to understand the different types of accounts that you can get, because many firms will offer intraday trailing, end of day trailing, or intraday and static, or static and end of day, whatever it is. Just understand this part, and it will be much easier. So let's see. All right, so here, this is just a small comparison between some of the firms. But for example, with Apex, typically it's a minimum 7 days to pass. However, they have a promo that it's, right now they've got it at 1 day pass, no consistency in evaluation. It's a trailing drawdown. There's no time limit. It can take 20 days, 30 days, whatever it is to pass your account. You can also, Apex is the only firm that allows 20 accounts or more. Well, no, not or more. 20 funded accounts. You can have like 30 accounts, but 10 of them can be like evaluations. You just can't have more than 20 funded accounts. So a lot of people will get 20 accounts, and they'll trade them by using a trade copier. So each account, if they make $100 in one account, it's going to basically copy and trade into all of them. However, I personally don't recommend, especially anyone that's brand new, to start with more than one account. Start with one account if that's what you're wanting to do, and pass it. Get a payout, because if you are trading one account, yes, it's great when you are green on one account and you're green on your the ones that you copy traded or whatever. But when you're red, you're also going to be red on the other ones. I know some people actually will get, and I do this sometimes myself, I'll have a lot of accounts, but sometimes I will like trade copy them in batches, but then kind of mix them up and then just trade one at a time. So rotate them basically. If there's a good deal, I will get, I'll stock up on some of the accounts. So Tradeify, like I said, they've got Lightning, 0 minimum days, and they also have intraday and end of day trailing. So you got to pick which one. Take Profit Trader, they have an end of day trading during the test evaluation, and then it's intraday and pro. And then Futures Desk, basically, they've got a really good static account. So let me go and kind of pull up some of the multi-firm comparisons. Okay, so let's say we're going to look at Tradeify 50K. It auto applies the discount. So the original price is $139. The profit target is $3,000, and your drawdown amount is $2,000. So when you're looking at a 50K account, you need to look at it what your drawdown amount is, because you can only lose $2,000. Okay. Obviously, if you do a bigger account, 150K, then you can lose $6,000. But total price with everything is like $97 for a 50K. If you go and you add, let's say we add Top Step, okay? Top Step, 50K account, $3,000 profit target, drawdown amount, $2,000, end of day trailing. They're all end of day trailing, or these are. And, the activation fee is $149 once you pass. Let's choose another one. Funded Futures Network, 50K. They actually have a buy one, get one free and no activation. So it's $31. Actually, it's like you pay $80 or something, $87, I think. You get 2 accounts and no activation fee. So it ends up being like $35 or whatever per account. And it's probably one of the best deals I've ever seen. Just because I think it's called BOGO or whatever. It ends October 31st. What else is popular? Take Profit Trader, 50K, 40%. no activation. So you can compare, add up all of, different prop firms and compare same types of accounts, the size, the original, if it's an end of day, if it's an intraday, and kind of see what the profit target is, drawdown amount, and then what the total price is. So like this one, they're waiving the activation. So some of these are waiving activation, and it's a promotion that they have going. Let me actually go down so I can show you guys how else to search. So here, detailed comprehensive analysis. Let's say you just want to do end of day. You can just do that little, it'll pull up which ones have the end of day. If you want to do static, it will pull up, oopsies, which ones have static. Or if they've got both. And then you can also, oops, scroll all the way to the right, see what they've got, going. If you click on full details, it will have more of a condensed version of the prop firm itself, more, information, I guess, more details, what's allowed, what's not, what types of platforms they've got, things like that, withdrawal. And then you can also, visit their website and it'll take you straight to them. So that's kind of, so do your due diligence. I mean, there's actually, if we go down here, this is how many prop firms are so far. I mean, there's 66 on here. I think there's probably about 80, but I don't do. Some of them are closed. I did not vet these, so some of them that are on this page are not vetted. So I don't. That's kind of your thing. Okay, let's go back here. I'm going to show you guys some of the executions. All right, so this here is called Project X Platform. Top Step X is probably the first one because they own it. And I think you guys have probably seen stuff in over social media, but if you haven't, this looks more like a TradingView. And basically, up here, you would input whatever you're trading, NQ, MNQ. It does come with a trade copier. It's pretty simple. I wouldn't necessarily chart on this. You can still use your whatever you're charting, whether it's SPY or QQQ, using TOS or TradingView, whatever you're using right now. You can chart on it. This is just where you can execute. For going long, obviously it's buy market, join bid, or if we're going short, it's either going to be sell market or join ask. Cancel all is if you want to cancel your orders, whatever it is. Pretty simple, pretty straightforward. This right here is NinjaTrader prop platform. So same thing if we're going long. All of them come with sim accounts, so you guys will just play with it. Go buy bid to go long, or buy market, sell ask, sell market, whatever it is. One thing I will say though, NinjaTrader, for example, has, I'm going to show you guys. I use NinjaTrader, but this right here is called order flow footprint. I don't know if you guys can see it, but 99% of traders don't use this, so you don't have to worry about it by any means. It's just, it gives me more insight inside of a candle around my key levels. And NinjaTrader allows us to add on third-party indicators, so that's kind of what that is. Whereas Project X does not allow that. And this is TradeAway platform. You can customize this however you want. Obviously, you can have more, 2 charts, 1 chart, whatever it is, same thing. Buy, bid, buy, market, sell, ask. This ATM where it says that's where you would input your stop loss. I highly recommend that you have a hard stop loss. I cannot tell you how many times people have lost their accounts because they did not have a stop loss. You can always re-enter your trades. There's no PDT, but NQ, ES, whatever, futures, it's pretty, especially if you're trading NQ, it's pretty volatile, and 30, 40 point candle in milliseconds can come through and wipe you out. And if you had a stop loss, then, you got saved. Either you're going to be auto liquidated by the market or you're going to have a stop loss. It's kind of what I tell, everyone. But, you know, basically what you need to know is if you know how to chart, if you're using, let's say Fibonacci's, you're using, I don't care, moving averages, support and resistance, whatever you're using right now, and if it's working for you, if you're charting SPY or QQQ, that's the same stuff you can use to chart, ES and NQ. A lot of people will actually chart QQQ and trade MNQ or NQ, or they'll chart SPY and then they'll trade that based off. I personally just do NQ. I don't chart QQQ and take trades off of that. So, but you can do that. Also, the biggest issue that I see people blowing their accounts is the risk management. So let's kind of talk about that. This here, guys, this website, propfirmtrend.com, is all free. Everything in here is free. But it's a risk management calculator. If you go in here and let's just say you get the 50K account, which is a $2,000 drawdown, and you want to risk 2%. Let's just say we're going to trade, I don't know, NQ, okay? Entry price, 25,000. We'll have a $10 stop loss. It tells you shouldn't size more than 2 MNQs, which is the micros. You're risking $40 per position. Now, if you have a really good, high conviction setup, you can move up to 5%, and kind of it's like trading 5 contracts, $100 per position. Okay. However, what I see with people is not only do they size up, on a $2,000 drawdown, that's the account destruction zone. 15% risk is gambling, it's not trading, because it takes 5 losing trades, you're going to be 50% or more gone, in your account. 7 losing trades, your account is likely destroyed. And this is how 90% of traders blow up their accounts. So another thing that I see from people is they'll have a $2,000 drawdown, maybe even less, and they're going to trade NQ. Let's see, it's not even gonna. So if you're trading, one contract, that's 15%. But what I see, because people tell me, hey, I blew my account. I'm like, well, what did you do? I know exactly, like 90% what they're gonna say. Well, I was in, with 4 contracts of NQ. Okay. So basically you risked half of your account or more for one trade. That's not how this works. If you want to, gamble, then, maybe go hit up a casino or something, might have a better chance. But that's just not, you have your account size, my account size, Rizzo's or somebody else's account size are all different. And just because, let's say he goes in with 40 NQ contracts, that probably means his account is a 7-figure account. You can't compare that with your $2,000 or $5,000 or $10,000 account. So you have to, use the percentages, the risk, you know, per position. That's basically um, the easiest way to lose your account is to over leverage. Don't get me wrong. It's not like I don't, I haven't done it or I don't do it times. We all have. But you need to really check, especially when you first start trading on the risk management. And also, we all have emotions. If you, go through this, um, it will kind of help you. If you're greedy and vengeful and anxious, it's going to tell you probably, consider not trading today, or, proceed with caution. And at a certain time, it's going, you can see your biases in your, emotional state that you track. And you're going to end up seeing that, hey, you know what? On more days than not, I am greedy. So work on that emotion. Not everybody has the same emotions. Some are fearful, some are confident. But we're humans and we're going to have emotion. And even though people will say, like, well, just leave the emotion out. Yeah, okay. Well, we're human, so it's kind of how it how it works. But this here, this is a trade journal, also free. You can input your import your CSV. You can also have a growth calculator and just kind of input, if I have a $2,000 starting balance, what you're risking. This is another thing, is the risk. You need to understand the risk to reward ratios. So if your risk to reward ratio is like 2 to 1, this means that you risk $500 to make $1,000. That's great, because with this ratio, you only need a 33% win to break even. Anything above that is profit. But I see a lot of people will have this. They're going to risk 3% to make 1%. You can't do that. You can't risk $1,500 to make 200 bucks, whatever it is. So you can input the information in here, and your win rate, and it will kind of help you see what your account is growing or what it would look like in 30 days. So another thing is, if you really want to have a full trading journal, this is free, guys. It gives you the analytics, your trades, all of that. Let's see, all time. So, for example, I have like I said, I always have about a 70% hit rate. And I'm a scalper. My average win is 53 seconds, 66 seconds out. I don't mess around. But that doesn't mean that you have to do that. Most people are not scalpers, and you just gotta, whatever your what is it called? Whatever your strategy is that you use right now, you can use it with futures as well. You just need to know how to size, and that's crucial. And then another thing, though, when I'm trading futures, one of the first things that I do is I check the calendar. So you want to check the trading economic calendar. Go in there and see, okay, do we have anything, any like red folders or whatever it is, that might have an impact. So tomorrow we have existing home sales, but on Friday, this is going to be so CPI, and like FOMC, things like that. Some prop firms will not allow you to trade 1 minute before and 1 minute after during like these news that they call it a red folder. So you can check Forest Factory as well. So the red folder during the New York Stock Exchange. Others will let you do that. So you need to abide by that. Also, I check bar chart, Benzinga, just to kind of see what's going on with the world, with the charts, with the financial news. And then, Financial Juice gives you real time, it's a news aggregator delivering your updates. You can also just find him on Twitter. But also, when I trade NQ, I do have what is it called? My Mag 7 up, so I'll watch Nvidia, Microsoft, Apple, all of those to kind of see in what direction that they're going to kind of give me more insight. So that's pretty much it. I mean, there's really not a whole lot to it. It's like I said, it's kind of like trading stocks compared to options. So I actually have a sim account pulled up, and I'm going to kind of just show you guys the execution. So just to show you guys a difference between NQ, MNQ, and so notice how it, like here, it moves in 0.25. So 50 cents, 20 cent, or sorry, 25, 50, 75, right? So let's just say I just want to get in. I'm going to go short. Okay. Oh, so see how I don't have a stop loss here? I can right click and add one. Okay. But I actually do have like different stop losses for different types of trades. So, okay, so right now I am down 6 points. Okay. That's 120 bucks right there. 5 points, So each dollar that it's moving is 20 bucks. And then, so just so you guys can see, I usually keep it I have it where my points are instead of the dollar amount, only because I think a lot of people are more, at least I am, more attached to money. So if I see the dollar sign, it, might make me, make a different decision about my trade. So instead, I just have points. I don't look at the dollar amount on there. But this is Asia trading right now. And, I'm up 40 bucks. So whatever. Let's close that. Let's do MNQ, which is down here where it says micros and NQ. Okay, same thing, except actually I'm gonna add so you guys can see the stop loss too. So each point is $1.25. Okay. I'm sorry, each tick is $1.25. Each point is $5. Oh, sorry, that's NQ. Oh my god, it's freaking 8 o'clock at night. Why did I do 3? I didn't want to do 3. Anyway, what? Sorry. Okay. All right. So see how you can move your stop loss, guys? You can actually just slide it, move it. But when these wicks, they move really fast, it's hard to even try to get out of a position. Sorry, guys. I'm like really tired because I've been on my computer since like 7 a.m. this morning. It's 8 p.m. already. But so notice how the micro is just, it's definitely, it's 1/10 of the price. Okay, let's go to ES. So let's say for ES, Each point on ES is $50. So if it goes from, so right now, each tick is $12.50. So $1 move, 1 point is 50 bucks. But if we use the micros, which is the MES, okay, oh shoot, Jesus Christ. I should have probably taken a nap first, huh? All right, so same thing, you can move your stop loss. Also, you will want to play in a sim account to adjust your stop loss to whatever your strategy is, the way you trade. On NQ or MNQ, I have a 40 tick typically for a stop loss, which is a 10-point stop loss. But during the first like 15-20 minutes of the market open, or when we're really like volatile, I adjust that. So it's so basically. Notice how it's pretty small moves when you're using the micros. And that's about it, really, guys. There's not there's not much to it. Let's see. Did I miss something? There's a lot of like, trading knowledge based stuff in here as well. Okay, let's see. Okay. Do you guys have any questions for me? Rushing to pass is definitely my biggest mistake. Yes. Hi, Emp. Please don't do that. Because if you are rushing to pass, that will transfer into your when you get funded. Here, let me show you something. Where's the trading journal? So see how it says consistency is 10%. Oh, that's right. I was going to talk to you guys about consistency. Where's the calculator? Okay. So some firms have a consistency rule. And what that means is that, let's say, so Top Step and Take Profit Trader, they have a 50% consistency during evaluation. Okay. So remember your profit, let's say it's $3,000. Your best day, I don't know, you made 1,700 bucks. You are going to be over 56%. Okay. So it means you can't pass. Either this needs to be higher or your day needs to be, at 1,500 or less to pass it, right? The lower this number, the better it is. It means you are more consistent. So over time, when you're trading, like over weeks, days, months, this will become, so when you see some firms that might have 20%, 25%, 30%, don't worry too much about that. The only people that really worry about the consistency are the ones that are trying to make a lot of money in one day, because, I don't know, there's a windfall. And then just not, you know, um, they're not consistent on other days. On other days, they're making $200 a day or whatever it is. Now, there's nothing wrong with that. You can still do that, but that number is, you just need to trade longer or have a bigger P&L over a period of, time so that that number is less, because technically as a, trader, we should be more, what is it called? Consistent. So, you're going to have big days, you're going to have smaller days, and all of that will just basically work itself out. So don't rush. I know what it feels like. Hey, I just want to, if I pass it today, I'm going to get funded tomorrow, then I can get a payout next week or, on Friday or whatever it is. Yeah, don't, because you're really setting yourself up for failure. Is it end of day drawdown? For which one, Tony? There are, some of them have end of day, some of them have intraday. Let's see, not that, what it is. This is a new journal, guys. It's only been available for like less than a month or so, but it's free. Works really well. You can, there's like trade ideas. Wait, no. I should really have AJ come up here and talk about it, but I yeah. Anyway, there's like a trading plan you can make, and it'll kind of help you with trading plans and stuff like that. Okay, any other questions that you guys might have? I'll do a little drawing of 2 people to join Traders Wealth Lounge for free for 30 days. I'll have a trivia question, okay? So whoever answers first. Let's see. What is the smallest price movement a contract can make? Oopsies. Yes, Baker. Okay. Baker, if you can DM me. And then, let's see if I can find. What are how many different assets are there for contracts? I'm sorry, for futures. I don't even know how I got through this, you guys. I'm so sorry. I'll give you guys a hint. It's between 1 and 10. Also, guys, if you found this, tutorial, if you found help in it, please consider supporting this. You can use my code MINX for the best platform discounts, and I'll continue to teach free and give you guys free, like stuff that you need to help you guys succeed. So, yes, Darilaki. Okay. DM me for that. And that's it. Any other questions that you guys might have? All right, I will end the stream and have a great night, guys. Thank you guys for stopping by and learning something new. And I will continue to do these, and I'll do some technical analysis. I don't know if you guys know, but my mentor is a retired market maker, and my other mentor is Einstein of Wall Street. So Peter Tuchman, he is still on New York Stock Exchange, and I can do some analysis if you guys want. So, all right. Have a good night, guys.